Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, I hope you have good holidays. So today we will, as usual, have prepared the weekly fundamental report on euro currency. So there are not a lot of events this week, as you know. It was a short week and mostly we could just take into consideration three major factors. So first is an unsigned bill by Donald Trump and the stimulus bill that have been accepted by the Congress. But there are some real reasons exist why Donald Trump hasn't signed it, because there were a lot of spending in there for third side objects, except instead of providing more help to the population. So Donald Trump had the reasonable question, so why we give the people just $600 while we could get them in 2000s. But contract the financing of some propaganda, some other spending in different countries. So that's the reason why he hasn't signed it. So currently, analysis tell different on this subject. So some of them suggest that Donald Trump will sign it anyway in these holidays. Others think that some risks exist if he will not sign it, or if he signed the 2000 help to the people, it could be blocked in the Congress. In this case, so it could become some risk aversion on the market, short-term risk aversion and demand for the United States dollar. First factor. Second factor is the Brexit agreement has been signed, so we spent some time discussing this event in our report as well. In two words speaking, this agreement keeps more questions rather than provide answers. And it's still unclear what impact will be, but even on the brief announcement from the government financials from the United Kingdom, from the Bank of England, they suggest the drop in the gross domestic product from 1% probably in the first quarter of 2021. And in general, economy will last approximately for 4% till the 2025 due to this decision. Because although the United Kingdom keeps the access to market of 450 million of the individuals in the European Union, this agreement doesn't regulate the service business. That is actually the 80% of the United Kingdom gross domestic product. And currently most analysts suggest that this agreement is more profitable to the European Union rather than to the United Kingdom. So we will see. But as you can see on the market, as you can see there, actually the cable has hit our target that we have specified on Thursday. This OP has been hit pips to pips, but overall reaction has been limited on the signing of this. And this action, most analysts suggest that this action already priced in this agreement that has been achieved. So nothing really revolutionary stand in this agreement, and it's not perfect. Let's call it in this manner. So third moment is overall assessment of the current situation in the United States economy. We provide some numbers, charts concerning the individual spending, savings, employment, and other stuff, and that points that the United States economy is losing momentum. So probably the result of the fourth quarter of this year will be worse, and the first quarter of the 2021 also could become negative. So it means that our medium-term trend, our medium-term suggestion, medium-term analysis of the bullish trend on the euro stands. We keep it, and we think that market could reach 128, 130 area within the couple of months. Still, what is more important currently for us is the potential of retracement. In the shorter-term situation could be different. So there exists some chances on the pullback within the 4 or 5 weeks probably on the dollar, in the strength of the dollar, pullback on the euro, rising of the dollar. Because currently the market looks a bit overbought against the United States dollar. Second, as I said, some external factors exist. For example, if the Donald Trump initiative to provide more help to the people, it could be blocked in the Congress. So in these cases, it will be risk aversion and demand for the United States dollar. So exist chances that market could show some pullback before it will proceed higher to the new top. At the same time, pullback brings no hazard to our targets, to our trend that we see. It just suggests that before upward continuation, market could show the pullback. If you let me, I'll start from the weekly chart, and here we also have some signs that this pullback could happen. It's not necessary that it definitely will happen, but it could happen. As you can see on the weekly chart, we have two warning signs. First of all, we have the inside wick. Well, maybe this is just due to the thin market that we have, but that is a pattern, guys. That is bearish harami on the top that suggests some pullback to the downside. The most probable target if the pullback will happen, it will be retesting of the 120 top. So all pre-targets both here, and it's maybe retesting some area right here. If trend will turn bearish on the weekly chart, also we'll get the bearish divergence. That will be also not good sign. So I prefer to get the bullish grabber here in the moment of the pullback and upward continuation to the XOP. So here we have to keep close eye on what will happen on the intraday charts and on the daily chart. If this risk will be cancelled and Donald Trump will sign everything and it will be okay, in this case market could just proceed higher. If this will not happen and the retracement will start, well, in this case the first target of retracement will be 120, and then we will see what will happen next. On the daily chart, guys, actually we have the same chart as we discussed on Thursday, and it tells everything the same as the weekly chart, because everything depends on the grabber, as on the weekly chart depends on this pattern, so direction of the breakout. Downside breakout means deep retracement. Upward breakout means action to the next target, which is that 2440. The same story on the daily. If grabber holds, market will continue upward action. If grabber fails, breaking this area, we expect reaching or testing of this area. It's confidence support, 120, 125 on average, retesting of this previous top. This will be nearest target. What I do not like on the daily chart, well, again, this is maybe again due to the thin market, but take a look, we have long tails on Wednesday and on Thursday. It means that some selling pressure exists here. It's not very significant, but still it prevents market from the further upward action. On the intraday charts, we also have some bearish signs. So divergence that we already discussed is our ABC pattern. The upward action on the background on the Brexit agreement was very choppy. It's not definitely the signs of the reversal. This is not this type of action. This is mostly reminds the retracement of the collapse here, of this recent sell-off. This makes us keep the same targets valid. So as you can see of this base ABCD pattern, we could get the XOPS 2025 right at the confidence support here on the follow time frame chart. Potentially it could lead to the deep retracement if we will get the head and shorts. We will see. But initially, this will be some drop somewhere in the area of the neckline. So the most probable reaction if grabber will fail that we have on the daily, and if harami on the weekly chart will be broken down. In this case, it probably will be the pullback somewhere in this area. On the hourly chart as well, the thing that I do not like is if we take a look at the pennant that we also discussed, market has turned down early. It hasn't reached the opposite border of the triangle. This is classical bearish sign. So overall price action here, as you can see, also stands very choppy. So this is not acceleration, it's just some kind of the retracement of this drop. This is another bearish sign that we have. So what we could do in current circumstances, definitely it would be better to not take the long position by far and see when the market will either cancel all these bearish hints or retracement will start and the retracement hits the first destination point around 120, 125, where we could take the second consideration, whether it makes sense to take the long position, whether the market has completed the pullback or something stronger maybe will come. We do not know, but until market will not erase or complete these bearish signs, it would be better to not take the long position, except only if you would like to trade grabber directly. So if you still would like to take the position, theoretically you have this chance because grabber is still valid, and who knows what will happen. Maybe Donald Trump will sign this bill. So in this case, you could try to take the long position except against the low. So stops should be below the low of the grabber. But all risks that stand around this trade we already discussed. So it's decisions up to you whether you would like to do this or not. I just share with you with the signs of the risk that we have, as on the 4 time frame chart, as on the hourly chart, and the conservative approach suggests that it would be better to wait for clarity, especially when the market stands thin and we have external factors that could make impact on the overall situation. So that's what we have currently on the euro currency.